Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. It's Friday. Made it to the end of the week. What do we got going on in the markets? Dow's up about 200. NASDAQ's up about 50. Okay, so we had two big down days, and now we're followed by two big up days, and we're right where we started from. Dropped 100 points in the S&P, rose 100 points in the S&P. Same place we started at, same place we were at 2 months ago, same place we were at 2 years ago. My take still is that the markets will come in. Now, these short squeezes, they can push this up a little higher. Maybe we get up to 4,200. Right now, we're at 4,150. My call still is that we're going to go down and retest the October lows. Now, I know a lot of you think this is a new bull market, and there's an argument for that. I suppose it's possible. It's just not my take. My take is that we're going to come back down, retest the October lows. Now, if you look at the VIX, it's extremely low right now at 16. 16 is really low. Anything below 20 is low. 16 is really low. I'm expecting volatility to come back into the market starting next week. We got the Fed announcement coming out on Wednesday. I say they're going to raise a quarter basis point. This could send the market either direction, could continue to squeeze, but I do think this rally is going to fail, and we're going to come back down, retest the October lows around 3,400. That's my take on the markets. Okay, let's move over to the real estate market. Now, real estate's always fascinating to me. Always a good time to talk about real estate, right? All right, today I want to talk about, well, several things that all pertain to the house prices, all pertain to real estate prices. Now, let's start with the commercial market. The commercial market it's a disaster. It's a complete disaster. Okay. So we got two buildings right now for sale downtown San Francisco on California Street. Okay, they're right next to each other. One is at 350 California Street. All right, so they were trying to sell this for $300 million, and they got no takers. This goes back before the pandemic. They decided to hold on to it. The offers weren't acceptable. They had high offers, but not $300 million that they wanted to get. Well, now they're asking $60 million. $300 million turns into $60 million, about 80% off. All right, so that's one building, right? But the building right next to it at 550 California Street, that's also for sale. Now, that's a 350,000 square foot office building. Okay, so now they bought this office building back in 2005. 2005, they bought it for $108 million. And they tried to sell it a couple years ago for $160 million. They had offers at $150, but they turned them down. All right. It just sold for $40 million. Now, you might find this fascinating, but in the Bay Area, there's houses that sell for $20, $30 million. All right, what if a rich individual wants to come and make that his house? A 350,000 square foot house can get it for $40 million. I don't know. It's just an idea there. All right. A shout out to Dan Good. He sent me this information. He's got a relative that works in the private equity market. Now, there was another office building for sale for $95 million. Okay, $95 million. Now, they turned down offers up at that price range. Okay, it declined to $95 million, and it just sold for $28 million. Now, office vacancy rate in San Francisco is about 30 to 40% vacant. But the prices of these properties are selling for 70 to 80% off. Now, I can't figure out why they're so low, but Dan explained it to me. You see, he has a relative that works in private equity. Well, the private equity market has dried up. There's no institutional buyers for these anymore. The institutions, they're the ones selling. They're the ones trying to raise money. They're the ones trying to get out of these properties. Okay, so the only buyers right now are wealthy individuals to buy these high-rise towers, these high-rise office buildings. So basically this whole commercial market has fallen apart. It's fallen apart. I mean, they're selling office buildings for what you can buy a house for. Maybe people want to buy the office building instead of the house. A much better investment. It's almost time to buy, right? They get to about 90% off, which I think could happen. That's probably the time to buy. Now, a lot of people think that this commercial, well, it's contained. Now, it's not really contained. We got to talk about the banking system. Okay, so the banks are the ones that made loans on these properties, right? As a matter of fact, the one at 550 California Street, that's owned by Wells Fargo Bank because they made a loan on that property. Okay, so they own the paper. They got it back, right? So they put it up for sale. They're trying to get rid of it. $40 million. But what was their loan for? Upwards around $150 million. So when you see these bank runs and you see them on Silvergate had the bank runs. They were involved with crypto. Silicon Valley Bank, they had the bank runs. They were involved with, well, long-term treasury bonds. And you see these bank runs, all these banks are insolvent if they have to mark their assets down to market. It's called mark to market. So if there's a run on the banks, then you have a problem because they don't have the money. They'd have to start selling these assets in the fire sale situations. Okay. All right. So what I want to talk a little bit about is, well, do you remember a few years back? A few years back, there were these bonds being sold. And these bonds were being sold with negative interest. In other words, if you invested $1,000 in these bonds, you would get $990 back the following year. Now, why would anyone in their right mind do that? I'm not sure. But there was 18 trillion with a T of these bonds sold. And now I can't figure out who would buy these bonds. You wouldn't buy them. You're not that dumb. I'm not that dumb. It has to be someone that's really, really stupid. Someone that has complete disrespect for money. Someone that knows they will get bailed out if the bonds fail. Who could that possibly be? And the only name I can come up with is, well, Jamie Dimon, the CEO of Chase Bank. All right, so let's say Chase, and I'm not just picking on Chase. I'm going to pick on Bank of America. I'm going to pick on Wells Fargo. But they are the ones that have to be sitting on these $18 trillion worth of bonds that have a negative interest rate. Now, granted, they can go to our government, and our government will gladly give them the full value for them. But they're sitting on these, and this is just waiting to go off. These, if you mark them down, remember, as interest rates go up, the price of these bonds go down. And there's 18 trillions of them around the world because, well, these were sold by governments like Japan, like Germany, like Switzerland. They sold these off, right? And they sold them at a negative interest rate because that's what they were issued at. But now these bonds have just collapsed in price, just totally collapsed. But yet these banks are sitting on their balance sheet. So if people have a run on the banks, they don't have the money because these bonds now are worth about 30 cents of what they were worth. Now, granted, the government's going to bail them out. And the government's going to talk this week, well, what First Republic Bank this weekend, right? This weekend it's going to go out of business, right? So now I do like that article, though. First Republic Bank, they're in talks with the government for a rescue plan. Now, the other word for a rescue plan would be a bailout by private citizens, by the taxpayers, if you will. So First Republic's going to get bailed out this weekend because they're going to go out of business. They had the bank runs. They don't have the assets. They're trying to sell off their assets as fast as they can, but they can't sell them off fast enough. So there's going to be a bailout this weekend of First Republic by the government. Of course, us taxpayers are the ones that are going to be paid for that. But there's no bank right now that's solvent. If J.P. Morgan had a big enough bank run, they're not solvent. They got these bonds that are paying negative interest rates. All of the banks are no longer solvent. Okay, so there's this huge problem in the banking industry right now. Now, this is causing liquidity to dry up. This is causing the credit crunch. This will spill over into residential real estate. People go, but Mike, it can't do that. I'm locked in at 3%. And that's correct. You're locked in. You're not going to be selling, right? But your house is going to go from 1.5 million down to 1 million, down to 900, down to 800,000. You're going to be freaked out a little bit. So a lot of people people in your neighborhood are probably going to start dumping their houses on the market. There will be panic in the residential marketplace, and this will send prices down a lot quicker than they are now. Now, right now, the market is frozen. The residential marketplace is frozen over, right? Okay, I mean, transactions, pending home sales just came out. They're down 28% year over year. There's no transactions. Granted, that person with the 3% loan, they're not selling, but the buyers have gone away, yes? The demand has dropped faster than the sellers selling. So there's no demand. There's no buyers for the residential real estate. Now, of course, in your area, they're still bidding up the prices. They're still getting in line for the open houses. They're still swarming around the properties looking at the ones for sale because nobody sells in your area. And I get that. Your area is probably going to double from here. But most areas are going to feel a lot of pain as prices start to come down. And there's going to be a lot of pain. They're feeling the pain in the commercial market right now. Now, that commercial market's going to lock up the banks. There's going to be this credit freeze. And that's going to roll over. Well, it's going to roll over to the residential market. Yes, we have low supply. I get that. But we have even lower demand. Look at this shortage of houses. It's kind of a temporary thing, if you will. People think it's permanent. There's never going to be houses to buy again. I beg to differ. And I think this shortage is, well, I think it's brought on by the government programs, right? Government programs being forbearance. 1.5 million people are behind right now on their mortgages. They're not making their mortgages. They're on the forbearance program still. That's the government program. You dump 1.5 million properties onto the market. There's no shortage, right? So some of these people are either going to be selling or going to be forced into foreclosure, and their house will be on the marketplace for sale. Now, you got 4 million people still not paying their rent. Remember those eviction moratoriums. So the landlords, once they can, they want to kick the tenants out and they want to dump those properties onto the marketplace. The investor wants to get out. He can put his money into a 5% money market, and he doesn't have the headache of the tenant not paying the rent. And the tenants, so even though they're not paying the rent, they still expect the landlord to fix things. Hey, my roof's leaking. Yeah, but you're not paying the rent. Yeah, but you got to fix my roof because you're the landlord. Government says I didn't have to pay my rent. So that's how it's been working out. The investor, they want to get out. So that's going through the court system right now. Get the evictions going, get the tenants out of the properties, and then those will be coming onto the marketplace. There's no shortage of homes. People think there's a shortage of homes. I disagree. There's 14 million homes right now vacant in the United States. These are vacant homes. Now, these are held by wealthy. People are holding second, third homes. They're hoarding them, because they're afraid. They don't want their money in the bank. They see what can happen. Silicon Valley Bank, their money could be in that bank and they could lose all their money. So they're keeping them in the hard assets, the real estate. Okay. But now when the stock market crashes, because they got stocks also, when the stock market starts to crash, and take my word, next 6 months we'll get down somewhere during that time, down around the 3,400 level, 20% off. There's going to be a panic, and they're going to need money, and they're going to put one of those houses on the marketplace. They're going to start to dump the inventory that they're hoarding right now. Look, there is not a shortage of properties. That's a misconception. A lot of people think there is. Oh, but Mike, we got to build millions and millions of homes. Everybody needs one. The millennials don't have any homes. Look at us baby boomers. We're not going to be here that much longer. You're going to have so many homes. You're not even going to believe the prices that they're going to be selling at when that happens. I mean, it's going to just, oh my goodness, you think this commercial properties down 80%? It could happen in the residential market, but I don't like to say that on a Friday because it scares people, and we're going into the weekend. You don't want to get scared right before the weekend, right? You want to think that your house is a secure investment. You want to think that it could never come down in your area, and that's a good thing to think over the weekend. Anyways, I'm Tall Mike. If you like this stuff, hit me with that thumbs up. Why not? It's the weekend. Everybody punch the subscribe button. I want to talk to you next week. We got the Fed coming out. We got the markets are going to be very volatile next week. We got more information on the housing market coming. Get out there, everybody. Have a great weekend. Bye-bye now.